Hi everyone, welcome to the 10th episode of Game of Investing podcast. AI or artificial intelligence is the new buzzword of all world leaders and corporate bosses. AI is taking the center stage of all investor conferences or World Economic Forum that just got completed in 2024. There is a lot of talk about AI. It's going through really a hype cycle. Now, is the hype real? Am I bullish on artificial intelligence? It's an emphatic yes. Well, there are only 4 or 5 mega trends that play out in every century. And artificial intelligence today is one such mega trend that is slowly climbing the wall of worry. In Templeton's words, bull markets climb the wall of worry, and AI is right at the hem of that new theme that is playing out. So, what makes me so bullish on AI? Well, the numbers speak. It's $1 trillion capex that is lined up or outlaid by the large mega tech companies around the world, especially the Magnificent Seven. Now, all of these companies are trillion-dollar companies in terms of market capitalization, and their balance sheets are bloated with cash. They have huge returns on invested capital, and they have the capability to do the outlay or putting capex, huge amount of capex in AI, because it's going to generate higher returns on invested capital in their businesses spanning around, whether it is an electric vehicle, autonomous vehicles, or advertising arena or the healthcare arena. They're going to generate higher returns due to the implementation of artificial intelligence. Where are they investing these capex into? Whether it is procuring the processors or the chips or the servers or setting up the infrastructure including data centers and networks, it is important to understand where this money is going into so that we can take advantage of investing in such kind of opportunities way ahead of the curve. In a groundbreaking announcement recently, Meta's Mark Zuckerberg announced close to $9 billion capex outlay, to procure 350,000 AI-ready servers from NVIDIA and setting up the AI infrastructure. Similar is the case with many other Magnificent Seven companies. Microsoft is already in the process of procuring 100,000 servers, putting an outlay of close to $10 to $20 billion in the next couple of years. And Microsoft is leaping big into this. They invested into OpenAI. By the way, OpenAI itself is valued at close to $100 billion. Well, there could be hype in that valuation, but it is big beyond what we can think. The large language models is just one aspect of it that includes inference and training. Well, there are other aspects to, AI, which I will talk about in the later slides. But, Microsoft is going big into the capex outlay. Tesla launched its Dojo supercomputer, and it is itself developing chips to, support the AI infrastructure. But it has ordered several thousand, hundreds of thousands of NVIDIA servers, AI servers, and chips to procure to support its full self-driving autonomous capabilities. Now, similar is the case with AWS, who has, AWS capex is supposed to climb 15%. It's not revenue growth, it's capex outlay, which is increasing 15% to $42 billion. Now, this is huge, and NVIDIA itself is investing billions into, developing the chips, whether it is their next generation AI chips that is called H200, when the other companies are already scrambling for the huge demand for H100, which is in scarcity, which is the supply constraint. AMD is bringing its own MI300 AI servers. Intel is working on its own servers. There is a huge boom beyond what we can think of. The number speaks. It's in trillions. This is a $1 to $2 trillion industry that is going to happen in the next couple of years and scale exponentially, because these are just 8 to 10 companies I'm talking about. Imagine the remaining thousands of companies that is going to implement artificial intelligence across the industry, spanning from healthcare to fashion to retail to, name it. Right? And there is significant impact because of the implementation of AI. It's just not the hype. Sundar Pichai, Google CEO, recently announced that his quarterly earnings announcement started stating that AI is transforming the world, and it is transforming the Google search itself. Nobody would have ever thought search is a disruptive business, and today there it is getting disrupted, and Google is at the forefront. Microsoft is there, trying to get that market share of the new type of search, whether it is image-based search, whether it is video-based search, whether it is a voice-based search. Search is getting disrupted. There is trillions of processing that is happening, data explosion that is happening. The data is the underpinning source for generating these large language models and training these models. So data players are also investing big time, whether it is a Snowflake or a MongoDB. Now, having said all this, how do you really play this ecosystem? How do you really invest in these opportunities? And the best way to play this is obviously to pick a basket, right? Look at ETFs that are directly linked to these kind of opportunities. You look at artificial intelligence, there are 3 ETFs I have put across. You look at the semiconductor industry ecosystem, the value chain is so big, you really don't know which companies to pick, whether it's Nvidia, which has 80% market share, AMD, the distant second rather, which has just 20% market share, or Intel, which is upcoming. So how do you participate in the next mega trend, which is artificial intelligence? There are 3 segments that you need to understand to participate in this opportunity. The first one is data center and cloud computing, which is already a maturing industry. Then there is semiconductor value chain. And then third one is the direct AI related ETFs. Now, my favorite among them is the semiconductor value chain. It's a very complex system. I have been learning across the semiconductor ecosystem and different companies. What do they do? How do they manufacture? But it's a very complex, technically complex environment. And today, Nvidia is a leader with 80% market share, and AMD is far away with a 20% market share. And then there is Intel and many other players. Now, this ecosystem has many players out there, not only these 3 companies that are doing the design. Then there is fab manufacturers, then there is testing agents, there are many other players, the power systems and all of them. So the best idea would be to just buy the basket, which is the ETF. There are 2 ETFs which I really like in semiconductor value chain, which is, one is the SOX, SOXS is the ticker, SOXX is the semiconductor ETF from iShares, and that's my favorite. And then there is SMH, which is a semiconductor VanEck semiconductor ETF, right? So those are the 2 best ETFs out there. If you really want a little more kicker, I have invested personally in SOXL, which is a leveraged basket for semiconductor, which is a SOXS ETFs leveraged basket. Then there is cloud computing ETFs, which is the Wisdom Tree Cloud Computing ETF, WCLD, and then there is Wedbush Global Cloud Technology ETF led by Dan Ives, who is a technical enthusiast. Then there are 3 artificial intelligence ETF, direct artificial intelligence ETF, which I really like, and they are like Invesco AI and Next Gen Software ETF. The symbol is IGPT. Then there is Global X Artificial Intelligence and Technology ETF, symbol is AIQ. And then there is third, iShares Robotics and Artificial Intelligence Multi-Sector ETF. Now, these 2 to 3 ETFs from this basket would suffice to participate in AI opportunity. So to conclude, artificial intelligence is definitely an exponential theme that is slowly developing and is going to enhance and grow exponentially in the next 1 decade. There could be many new players like the Anthropics, like the Hugging Face that we haven't heard before, who are going to emerge and rule the roast. There could be many players who will fall apart. Having said that, we don't really need to worry about who will be the next leader or who will fall apart. The best way to participate in this opportunity is through ETFs. Trust this was helpful. Signing off, Sandeep Anand.